And the so-called earnings season has pretty much begun here in Korea with, as we heard, the country's largest companies due to post their Q2 earnings in the coming weeks. For a glimpse at the projected numbers, here's Oh Soo-young.
Korea's largest companies are set to achieve record profits for the second quarter of this year, driven by the IT and banking sectors.
The second quarter will likely represent a historic high in terms of profit, gaining 19 to 20% on-year. On-year growth of 40 to 50% is likely to be seen in the third and fourth quarter as well, according to the current market consensus.
Due to the surge in global demand for memory chips, along with a hike in unit prices, Samsung Electronics and SK hynix are expected to post their largest ever profits. In Samsung's case, the company is likely to surpass Apple in terms of operating profit and take Intel's #1 spot in global semiconductor sales. Also, growing demand for OLED and LCD panels for handsets and digital devices is likely to have benefited battery makers and panel producers like Samsung SDI, Samsung Electro-Mechanics and LG Display.
These manufacturers are expected to record huge gains at a rate comparable to that in 2009, backed by a new spurt of growth in flexible OLED and dual cameras. The growth momentum is expected to last into the medium and long term, especially with the development of electronic cars like Tesla 3, which require state-of-the-art batteries and components.
Market watchers say the banking sector will also see large earnings. High interest rates for loans have boosted their net interest margins, a crucial measure of profitability. Another sector that's likely to see substantial gains is durable consumer goods, on the back of strong seasonal demand for household appliances. Meanwhile, a steady fall in global oil prices, down roughly 10% since the start of this year, is expected to take a heavy toll on energy firms like Lotte Chemical and SK Chemicals. The country's biggest automakers, Hyundai Motor and Kia Motors, are also likely to see narrowing margins due to a decline in sales in their main overseas markets, the United States and China. Experts say other sectors likely to see lower earnings are retail, cosmetics and leisure, largely due to the loss of Chinese customers. Still, experts say with new product releases and an improvement in global demand conditions, such as a slight recovery in oil prices, companies will have the chance to boost their margins. The total operating profit for KOSPI-listed companies is expected to hit a record high of $169 billion this year. Oh Soo-young, Arirang News.